We are live. Good morning, everybody. Happy Wednesday. It is a big day on Wall Street. You all know why. We've got a Fed meeting today. Statement out at 2 p.m., press conference at 2:30. We know what they're going to do, but what are they going to say about the future? That remains unknown. We'll find out later, of course. Other than that, earnings. Two big disaster stocks overnight here. Lyft and Tupperware. Lyft was so bad that Uber was like, we got to report early. Uber was supposed to report last night, but they reported this morning because they wanted to get out ahead of it. So many earnings, like hundreds of earnings reports to talk about here. AMD, Airbnb, Starbucks, a lot to get to. We'll talk autos with our guest, Michelle Krebs from Automaker at 8:35. So smash that like button, and here we go.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
We'll bring on Joel and Dennis now, and Joel's going to bring on his charts. And Joel, have we had an overnight session this quiet in some
I don't know. I'd have to go back on record here. I think 20, 24, 25 handles. You might be right, but I'm sure that will not persist since we are going to 400 in the spiders and 4,000 in the S&P today. That's what we found out on the pre-market show. We got a high of 41.91. That's just under the high from yesterday, 95.75. Pre-market low right there near the close. So, of course, the market, good number, 69.25. There we're looking at up 17.25 handles at 41.8650. Crude having a great day, up 459, 107.04. Gold languishing at the 1850 area, down $1.90 at 1868.80. Silver still stuck in the 22 handle, down a nickel, 22.61. Bitcoin, the undercut the 38K, but rallied back up 1430 at 39,055. And Ethereum futures, they're up $104.50 at 2874.50. Let's bring in Triple D and let's get into the mind of the Fed and Jerome Powell.
Oh gosh.
Oh gosh.
That's not easy. That's not an easy task. I think I need to start with an easier task. Okay, well, Joel, take us away.
Take us away. So,
what is Powell thinking?
Well, we're going to do the half, right? We're going to do the right. And what he may say or may kind of indicate is that maybe supply chains are starting to ease up a little bit, and maybe he's looking at inflation may have turned. So all the market participants since that last hour on Monday are thinking, oh my gosh, if he says something like that, we're going to go to 4,300. So they're buy. And they missed another buy the dip opportunity.
I missed the bottom.
I missed the bottom again. Now, he could do that, or he could come out and be a super hawk. And then, and say, man, we're going 3 quarters now. We're going 3 quarters at the next meeting, and we're going to go a point at the meeting after. But right now, I think you have scared money out there that's not in the market, and they're trying to get in because I think that's what you have going.
That's a continuous thing. It's like the FOMO, and this is why I'm kind of with Mitch, is that I still don't know if we've seen the bottom because I still see FOMO everywhere. We haven't broken it. We haven't broke the buy the dip mentality. We haven't had a serious sell-off in a lot of stocks. In some stocks, definitely. And the Kathy stocks, woodshed. But in
Kathy
this,
Woodshed, that's a good one.
no, I know they actually somebody tweeted at me Kathy Woodshed, and I was like, that's kind of right. but in those stocks, there has been, and that's why those stocks seem to want to be the first to bounce. But there's so many stocks that are still holding up fairly well that we haven't broken that mentality yet. You know, I look at my long-term portfolio and it's ugly, but it's not kicking down 20, 30%. I think I'm like 10% off the highs. I mean, this is still correction territory. Should we be in correction territory or should we be more in bear market territory? You know, that's the question. Like when you add it all up, it doesn't add up to a friendly stock market environment. But to get into Powell's head and figure out what he's going to say, it's difficult. They know they got an inflation problem. They're attacking it. How hawkish is he going to be? I don't think they've seen any data to not be hawkish.
Right.
You know, I don't think we've seen, you know, maybe next week when we see the CPI, is it next week? Because I keep asking. I believe
Wednesday.
it's next week. Wednesday.
Yes.
So we see that maybe we start to see, we're not going to see prices go down like people saying, we're still going to be up. But maybe we don't see that crazy. Like, what are the expectations for CPI next week? Is it like plus 8% still?
Oh, I have to.
I threw on you right under the bus.
You are too
tomorrow.
far.
That's for tomorrow.
You're too far into the future for me.
That's for tomorrow. Yeah. And I'm not so bearish. I'm on the fence. I really could be talked in either way. The only reason I want to stay on the bear train, or at least in the high cash train, is the uncertainty of this environment. So I do think my green light is still going to be when we see some CPI data that is not rip-roaring hot as hell. And if we get that, then I'm going to start buying stocks. If we get a little bit of an easy, like, hey, the CPI is starting to cool off a bit, it's working trade. I mean, take us back to the COVID trade, Joel. Remember this? Remember what the bottom of COVID was? We sold off 30% in a month. Some people who maybe started after March don't realize how ugly that March 2020 was. But we literally were down 30% in basically a month. And why did we bottom? It wasn't because COVID was over. We bottomed because we had a downtick in cases. We had just started ticking that, hey, these lockdowns are starting to work.
Good point.
And so I think it's going to be the same thing. We're going to bottom when we see that CPI data not so hot. So I don't think we bottom on a day, you know, because Jerome Powell says something. There's the potential to bottom next week, Wednesday, with the CPI data. But I don't know if we're going to like run into that because I think there'll be nervous money maybe still even into that. So I'm sitting with like 48% cash. But I will put some of that to work if we see some data that isn't that hot, even if I have to chase a little bit that day. But I'll be quick.
The timing of it isn't great because the Fed is going to do their thing today. And then in the next week, we're going to get two huge data points, right? A jobs number on Friday and CPI, which is probably more important right now on Wednesday. So they will have to, whatever they say today, it will almost be irrelevant potentially by next week. So
it's a great point.
Well,
what they're talking about today is going to be irrelevant by next week.
Part of the rally yesterday was the jolt number was pretty good. The job openings, yeah. So I think the unemployment. I mean, you know, it's flat. I mean, you know, if you see a big jump in the unemployment rate, then you got to head for the hills, right? But I don't see that at least this quarter. I don't see the imminent recession / depression starting this, you know, last month. But we shall see.
All right, let's go to the earnings here. We got to start with Lyft. It's a disaster of the morning. And one of those cases where if you were listening to the conference call, the conference call was actually pretty bullish. It was pretty positive. Right? There are some calls where you can like clearly get the sense that like, okay, like management is admitting that things are not going great. Other conference calls where you really don't get that sense at all. And I really didn't get that sense at all. I was going through the transcript this morning and it honestly seemed pretty darn positive to me. I wasn't listening to it, but I read it. But the bottom line is, at the very first inkling of a slowdown in growth, and in your growth stock, you're getting punished, and that's the bottom line here on Lyft.
Yes.
The earnings came in at 7 cents per share. A little bit light. There, let's see, adjusted net income that was up year over year. Sales guidance came in just a little bit below the estimate. Not even that much, right? It was basically in line or light by like $50 million, right? It's like not even that light, but like a little bit light, right?
Yeah.
But if you take that guidance and combine it with the fact that they admitted on the call that they're having to spend more and more money to incentivize drivers onto the platform. Again, just the littlest inkling of a slowdown, and you're done in the eyes of Wall Street.
Yeah. This is every day. There is like a growth stock down 25 to 30%. It's why it's so hard to hold the growth stocks. I mean, the ones it seems like in this earnings season has been just horrible because they disappoint, they go down 25%, they beat, they go up, and then 5 days later they leak it back. And it's like the shorts win in both cases. They just have to hold on longer in the case, obviously, where the stock beats and the stock pumps up. So it's tough, but the ones that are missing, for the most part, just aren't coming back. Like they aren't like bouncing back like we've seen historically in other earnings seasons. So it has not paid to buy the earnings dip on anything really. I mean, the odd one has maybe bounced back, but even in the case of Carvana, remember it sold off and then it bounced back like $30 that after hour session. What happened? It started leaking, gave it all back, and then it went down even more. So I mean, it's just been a tough buy the dip market if you're on disappointing earnings or disappointing guidance. This is disappointing guidance. It's a reason that I'm probably not buying the Lyft dip here today. Is there a point in time I might buy Lyft? Maybe, but trying to be that hero on day one has turned many people not into a hero, but into a zero. So no, thank you.
Pre-market low, $22 right on the kisser. You rallied $1.29 off that. So don't want to say that we're not going to get back down there because anything can happen. But I did see a monthly low in the lower 21 handle, I believe. This monthly low comes in at that was 22.90, so we're below that. 21.34 was your October 2020 low. So I'd be buying to cover short anywhere between 21.5 and 22.5. Not that I'd be trying to go long, but like if I had like a boatload to buy right now based on the scenario, that's what I'd be targeting. What could very well happen is that it gets teledocked. And you go down, you make a low, and it's been on for 4 days. So I'm not saying that's going to happen, but this is a big discount, or it could get Estee Laudered, right? Same kind of
slaughtered, you mean?
Oh, good one, Dennis.
Well, I think it had a pretty good day, Dennis.
Oh yeah, it came back. It did come back. So you just gave two examples of stocks actually bouncing back.
Yeah,
the hero trade working out.
Yes, I am. So I'm on the opposite. I mean, like I said, to cover a short today or nibble it along 21.5, 22.5. Of course, if the buyers jump out ahead of me, I would have to adjust that. But that would be the plan. No plan on going long, but that's what I'm looking at.
All right,
I'm not shorting it at $22 or $23.
No, we don't
shorten
the hole. Page 6
mean,
of the book, Joel. Don't shorten the hole.
You got to catch up on that.
I know,
let's go on.
Joel. Joel started actually writing some stuff, and I haven't actually written anything yet. So I just like speak it out, and then you write it down for me because I'm too lazy to go write it down. So
and
page 6,
Uber.
Don't shorten the hole. That's the only thing on the page.
Yeah, well, so let's talk Uber. Uber was on the calendar to report earnings tonight, and if you saw the stock last night, you assume okay, Uber is down because Lyft is down, right? Which makes total sense because they tend to move in sympathy. But now things are looking different because Uber moved their earnings report up till this morning. They weren't supposed to report this morning, but they did anyway. I think because they knew, or this is Dennis's theory at least, that they knew that it wasn't as bad. The bottom line with Uber, a lot of their financials are janky because of there's a big equity. They said their equity investments weighed on their earnings for the quarter. But the bottom line here is mobility revenue up 58% year over year. Delivery revenue up 12% year over year, which is impressive because, again, we're talking about delivery, right? During a pandemic, presumably went a lot higher, so it's even higher now still. So it looks like it was a pretty good quarter for Uber, but a lot of the EPS and the earnings and stuff is kind of janky because of the equity investments.
We just had non-firm data too, by the way. Not that it matters, but doesn't matter.
No,
It's not moving the market.
No.
All right. So Uber comes out. They see their stock getting hammered last night off Lyft, which it really did. Probably pissed them all off and saying, hey, our numbers aren't that bad. Let's get them out there. Because they were obviously supposed to report tonight, and they jumped the gun, and they reported this morning. So, and that is why, you've seen the stock obviously come off the lows. With that being said, it went green briefly at the $30 technical level, which is
look
a
at
huge
that.
number.
Yep.
Could not get through there, and now it's starting to leak here again. So am I really all excited to go buy Uber here when Lyft is getting punished as hard as it is, even though the Uber numbers were okay? No, I don't think so. So I think I'm just going to sit this one out.
Yeah, hit 30 a couple times and boom, hit it and then retreated. I've never had a bullish take on on these stocks, so this one is
Well, that's been correct.
It's been a little bit harder to read. I don't think you're going to get a look at 30 today. I think the bulls are probably hoping for just to see the close again, 29.47. Yep. So that's my first, resistance. Of course, a bust over 30, then it could run. But I look at the closes resistance, and then this 28.85 from yesterday. We're actually trading near yesterday's low. So if this thing doesn't get off the mat like really quickly, the bulls don't come in and rescue this, I could see this testing this low right here at that's not that far away, 28.28. So better hold in here quick, or I don't know about that pre-market low down under 26,
Yep.
but bulls got to spring in action. I think it's expensive. I mean, it is Uber and Lyft, and I mean, I don't know. I mean, I don't do a lot of traveling.
You mean the cost of the Uber itself is expensive?
Yeah.
Well, there's a convenience factor because they hunt you down. Like you don't have to search out. Like you have to search out a taxi.
What about my whistle? I don't need a Uber or Lyft. I need my
Joel
whistle.
has a whistle. I know.
And
Why didn't you invent the ride company called Whistle? It would have been a better name than Uber or Lyft, called Whistle. There, I just created $1 billion idea for somebody out there. We're gonna just basically rip off Uber and Lyft, same platform. We're gonna call it Whistle because it's a cool name. And you just like boom, and maybe when you actually call it, the little phone does a whistle or something too, just for fun. Ooh, that's exciting. That's a nice little thing. So we'll call it Whistle. We just
I bet you I could go upstairs right now, okay, and open up the door, okay, and I could go to the farthest place in my house, and I could whistle, and you guys would hear it through the mic on my desk. And that's also from the swimming days, when your buddies are swimming and then they take a breath, and I won't do it. Because it'll blow everyone.
It'll blow all our ears out.
I can attest to the ferociousness of Joel's whistle. It is loud.
Yeah, and that's why you don't like Uber or Lyft, because it puts your whistle out of. You don't need it anymore.
No,
exactly.
Yeah.
Yeah.
Look how quiet the SBUX are, Dennis. What are people doing out there? We're just like 41.86 hanging up 17.
Calm before the Fed storm.
Look at
Mitch. Where's Mitch? Are you hiding in the background, Mitch? Because we got to get Mitch. Mitch is scared. He's running scared back there in the background. Are you here, Mitch?
He's not scared. He's not
there?
Scared.
He's gone.
He's here. Give him a second.
We're waiting for Money Mitch.
He's not scared.
What's going on?
There he is.
Bear Mitch here.
Money
Bear Mitch here. Let's do this.
You got me running scared after the pre-market show. Give us your thoughts here. Give us your market thoughts here, because you got me scared all of a sudden.
Well, just look around, right? What do you see this morning? There's 2 words: extreme optimism. What? Anytime we start going up, what happens?
Where do you see that?
Everyone's like, "This is the bottom."
Guys, I do see that.
Let's go buy AMD. Let's go buy Nvidia. Let's go buy Apple. Let's go buy Tesla. If those end up red today, see ya.
It's a very good point that if they end up red, then that I wouldn't feel good either. But that I would just say that the AMD and the Airbnb earnings reports from last night were extremely bullish. Now there's a chance they don't hold for Jack, and that's a whole other thing. But just from a fundamental basis, I listened to both those calls, and they were very bullish. Both of them.
And I
Business-
agree.
business
I
is
don't
good.
disagree with that. That's why I'm going to be watching today. Do we get a tech wreck? Do we get the Qs to get hit harder? If they do get hit today, that's going to be my sign that, yep, wave the red flag. I'm done. I'm
It's
out.
kind of tough though
See
because
you-
it's
see you in
it's
June.
you got the Fed too, so I don't.
It's after 2 o'clock.
Yeah.
All right,
Yeah,
what do you
another
think
thing
the
is-
Fed's going to say, Mitch? What do you go into
Yeah.
Powell's head? We're trying to play, in Powell's head here.
Yeah.
What do you think Jerome Powell's going to say?
Well, he's going to say that there's been other factors that are affecting the economy. So he's going to sound a little light. He's going to drop the 50 points and then sound light, I think. He's not going to be sounding like, oh, yeah, we're doing 50 points next meeting also. Just to kind of give a little bit of ease to the market. I mean, because at the end
Well,
of
then
the
the
day,
market rallies, though, doesn't it?
Yeah,
that'll be the question. That'll be the question.
Dovish comments, we go higher. Hawkish comments, we probably crap. I don't
That's
know.
the way the algos are probably reading it.
Yeah, yeah.
That's a good chance it's programmed.
Yeah, one of the things that I'm going to be looking for is what I don't care about the interest rate hike because I'm focusing on what the market has focused on, which is the selling off of the assets. That's what I want to hear about. And how fast have they started that? And when do they at what price? Remember how Brainerd started talking about how they were going to go to extremes on that. I want to hear more conversation on that topic.
We'll see. 2 o'clock is the statement. 2:30 is the press conference. We'll be streaming that on our YouTube channel right here. And then all eyes will be on the Fed, and then it'll end, and then that will be that. Let's go back to earnings here, guys. There's just so many this morning.
AMD.
I want to go to Airbnb here.
Oh, Airbnb.
Oh wait, what did I have next? Yeah, Airbnb was next on my list. Their report again. I watched it. I listened to it. We streamed it on YouTube, and it was just very bullish, man. I mean, EPS beat, sales beat, gross booking value, which is just the total value of bookings on the platform, beat. EBITDA, huge beat on the EBITDA, like a massive EBITDA.
Yeah.
The estimate was 75 million. They came in at 229 million. Their very first positive EBITDA Q1. The guidance they gave was a beat. They basically beat in everything. They beat estimates across the board last night. It was a very positive conference call.
We got this one right. I was saying I could get talked into it yesterday. I did not go into it because I just didn't have the guts to go in ahead of earnings. I still think this is kind of the best of both worlds here because you think about, and I was talking about this a little bit with you guys earlier, the thing about the traveler, the typical hotel, is full of leisure travelers and business travelers. I think the majority of travel on Airbnb, and I haven't done any research on this, but I've got to assume it's mostly leisure. There's not a lot of probably businessmen going to Airbnb on their business trip. They go to a hotel. So there'll be some business on Airbnb, but I've got to assume the majority is leisure. And that leisure traveler is still going to be strong. Even if, we lose the business traveler longer term because of Zoom and stuff, Airbnb doesn't get hit as hard on that. So I love this business long term. Short term, it's still a high valuation stock, obviously, when market doesn't like these kind of stocks. But I do believe a stock like Airbnb, when the market goes to turn, is going to end up being one of your leaders. And I do believe it can eventually grow into this valuation too. So I don't even think it's that crazy. So it's a stock that's on my shopping list. I'm not going to buy it the day it's up $7 in this market because it's not paid to do that. But I do think this is a stock, if you're buying it 5 to 10 years from now, you actually might make some good money with this one.
Well, one thing I didn't think about until really just this morning is when we were talking is I would imagine a hotel can only lower their prices so much, right? They have expenses, they have payroll, they have to manage their a hotel room is not super elastic, right? It is somewhat, but it's not nearly as elastic as an Airbnb, because if you're renting out your Airbnb, you go as low as you want to go. It's your decision, right?
Yeah.
You want to go down, to 50%, go for it, right? It's your money. It's your house. Do whatever you want.
Just so many different options. I mean, yeah, there's a good point there too. I mean, Is the potential for somebody to come out with a better app there? I mean, is the bar? I think there's so much now that people are using it as a verb as well. When they start using it as a verb, it's going to be hard to take them off the throne. So, I mean, we saw that with Google. Now we just say, I'm going to Airbnb it. I mean, so when they start using them as a verb, that's when you got best of breed. And even if somebody else comes out with a better app with maybe cheaper fees or something like that, it'll still be hard to take them out. So I think this one is going to actually be one that leads the next bull market, but I don't know when the next bull market is. And I don't want to be early and this thing goes down to $100 and then it leads us out and then we're 120, 130 and leading us out. So I got to wait until I'm feeling more comfortable with stocks, but this one is definitely on my shopping list. It's one of the growthy stocks that I actually like. There's not a lot of growth stocks I like.
Good breakdown. Good analysis. I know that we got some trips planned, and I know Lisa spent a lot of time on that site, and I know that's what we're booking.
We do too.
4, yep, 2, 3, 4 places.
too.
So that's what you use. Just looking at the chart, just throwing out all the fundamentals here. Not really going to pay much attention to the pre-market action, but to me, 155 is a really big level. And you did get through it on the initial number. You got to 156 and change, but I'm looking at the Monday high right there, 55.13, a little bit below it yesterday at 54.49, and then also it was also the lows in that area for a couple days last week. So you bust this thing above 255. I'm not gonna say it can't go into the 160 handle. I was long, if I played it for a trade off earnings and it didn't right up to 155 and take that out, I'd be a little bit concerned in this one. Of course, this next support is down at the close. That's a long ways away down at 145. But when the market crashes, when the SPUs drop 185 points, then you should be able to get it at yesterday's low.
I think this quote from the call just about sums it up here. This is from Brian Chesky, the CEO. We are particularly encouraged by the compounding growth we are seeing in North America. U.S. domestic demand this year has so far outpaced our internal expectations, and we are encouraged by U.S. international bookings exceeding 2019 levels. People are going places, and
they still are.
And you know what it is? It's a continuation of the trend that they said last time around as well, which is that stays of longer than like a couple weeks, stays of 30 days or more are at like an all-time high.
Yeah.
Right. So
really, wow,
sure.
Wow, I didn't know that.
Is this not long-term bad for all the hotel stocks? Like Airbnb as it continues, and this was a theme we talked about before COVID, a few years ago, and just saying why I wouldn't want to own hotel stocks. And now you've had this ridiculous rally in all the hotel stocks because people are going places. We're going to go to hotels like we've never gone to go to hotels before. Is that right though? Or is it we're going to travel like we haven't traveled before? Because I think in the big scheme of things, I don't know if I want to own the hotel stocks. I don't know if I want to own them long term, even though the reopening trade has helped them. The reopening is going to slow. I mean, we reopen. People are going and doing things. We've had the great reopening. We got to start thinking about that in the past now, at least in the U.S., maybe not in China. But, we've had the great reopening here, and we got to start looking forward. And looking forward, I just think that Airbnb is going to start eating the hotel's lunch. It already is. But is it going to start eating it more? I think so. It's better choices. It's more exciting. I mean, you go to a hotel room, Joel, and you're just like, okay, same hotel. Okay, this is nice amenities, but still a hotel. And you go to the Airbnb, and there's so much different stuff you can do.
Well, I think the biggest difference is that the whole working from anywhere thing, that does not benefit hotels because nobody wants to stay at a hotel for a month, right? But it clearly benefits Airbnb.
Well, there you go too. There's a lot of reasons to own Airbnb, like long-term, owning Airbnb and shorting hotel stocks.
Maybe
that's a pair trade you could put on now.
I think so.
Yeah, maybe that's a long-term pair trade. Now, obviously, you got to look at fees when you're shorting stocks, borrow fees and stuff like that when you're shorting long-term. But there's probably a play here.
You know what the thing too about these Airbnbs is? The one that we stayed in Florida. Trying to think of the name of the island we were at. I mean, it was like brand spanking new, right? So how much does it cost, like, to redo an old hotel, right?
Oh, they spend money.
You spend a lot of money, but you just like this was like a 4, 5, 6 unit Airbnb. You know, if you're a handy guy or you got some buddies that are handy, you get it done. It's like it's not like all new linens, old everything brand spanking new. Just think about the cost to upgrade these places. I mean, that's what people are doing. They're buying cheap places. Singer Island. Hey, how does you remember where I was at, Crypto Peter? Man, oh man, he remembers
They
right.
follow you, man.
He was there.
Whoa.
Joel. He was there.
That was almost wow. When was that? That was last year. Way to go, Crypto
Singer
Peter.
Island.
Yeah. It
Sounds
was
like a
fun.
fun place.
All right. I want to move away from the Airbnb conversation. Just real fast before we bring on our guest and just do AMD.
He guessed because I said Riviera.
I want to do AMD. I wanted to talk AMD here. Is there a company that is a well-oiled machine more than AMD?
No.
I can't think of one. I just pulled up the earnings history in Benzinga Pro here because I was curious. When is the last time this company missed on their headline numbers? And it's been a while, right? I don't know, they went back to 2018. They haven't missed on their EPS or sales since Q3 2019. I mean, this company, I'll go back further. This company is just an absolute monster. They beat anyway. Last night, same story. Look at this. I mean, once they got things rolling here with Lisa Sue. Yeah, it's a beast. So anyway, last night they beat and they raised. A lot of that was due to Xilinx, the incorporation of that deal finally closed, and they incorporated Xilinx now, and that helped the business last quarter. But it was just a well-oiled machine of a company, even amidst this crazy, chip shortage we have globally. AMD just keeps on keeping on.
That's an unbelievable company. Lisa Sue is just unbelievable. And I mean, the way it turned it around from, 15 years ago was AMD was an afterthought, and AMD is now, right up there with NVIDIA. It's unbelievable turnaround story. The company's not expensive. I do own it. I was early on it. I wanted to own AMD for a long time. I thought the $50 pullback was enough. Apparently not. It's decided to pull back more, obviously, from the highs. So I'm bag holding this thing still here, but I stuck it in a long-term portfolio for a reason, is that I wanted some chip exposure, and the valuation isn't crazy anymore. So it's still not crazy, but, do you get another shot back at 90, 91? Do you want to chase something $6? Probably not. It's not the market to chase in, but with that being said, this company fires on all cylinders.
Spencer, can you reach out to her today and see if you can get her on the show? I know she's a big Kramer, because I'm telling you,
Joel,
I had a clerk on the floor at the Merc. Her name was Lisa.
It's not the same person.
Joel keeps thinking it's Lisa Sue. Does she look the same?
Joel,
yes, she looks the same. And
you want to know she has a clerk on the floor.
This girl and Lisa Sue went to what's that good school that I was going to go to if I couldn't get in Michigan?
Harvard?
MIT. Yeah, Harvard was my third choice.
Right.
MIT. But so this is what I'm thinking about in the AMD. Okay. $100. This thing is got to get to $100.
Oh, it's going to have trouble there.
Yeah, it's going to have trouble there. I don't even know if it's going to get there today, but I think longer term, I mean, you had that many lows there. Look at this monthly low, monthly low, monthly low, monthly low, and then it finally cracked, right? So a lot of people are thinking, I want to get my money back in triple digits, right? So that just longer term, it's got to get over 100 and close over 100. Is it going to do it today? It doesn't look like it. So I'd be I'd be worried about a fade on this one. I'd be worried about a fade if it doesn't take even the pre-market high. What's the pre-market high? The pre-market high or the after hours high, I stand corrected, 98.79. So for me, 98.79 to 100, sell zone, major sell zone.
It's been the year not to chase. 2022, the year not to chase. I'm not chasing anything up 6.5% because this 2022 is the year that you get a second chance or a third chance or a fourth chance or a fifth chance to buy. Hasn't paid to chase, so I'm talking against my book here, yes, because I'm already in it, but I don't think you need to chase it either.
All right, we've been debating on our show for the past couple of days or couple of weeks is consumer spending, specifically consumer spending on big ticket items like cars. So joining us now is someone who can speak a lot more closely to that, Michelle Krebs. She is the executive analyst at Auto Trader, and she can speak to that demand, that consumer demand in cars, in trucks, and how it's waxing or waning. So let's bring Michelle on the show right now. Michelle, good morning.
Good morning.
How are we doing today?
Good. How about you?
Doing great. So, as I mentioned just now, we've been having this debate just about cars or about boats or appliances. The big ticket items. What are you seeing right now, or what is the data showing right now with regards to just consumer demand in U.S. auto sales?
Well, I think first the big mistake that people are doing are saying demand equals sales, and that is not the case at all. Demand is extremely strong. Sales are not, because we don't have the inventory to fill that demand. So demand is still outstripping supply, and supply is just not budging much. We've got about 1 million units every month of new vehicles to sell, and it's been kind of stuck there for quite some time. So we still have not filled that pipeline with production yet, and now we keep getting more hiccups.
So it's still not a demand problem. Interesting.
No, not at all.
All right. Because sometimes I see these commercials and I just like shudder at these like pickups that are like, 60, 70, 80 grand. And they're nice. Don't get me wrong. They're nice cars. But I mean.
Well, the demand is from a different kind of buyer these days. A lot of people, because of higher prices, have been pushed out of the new vehicle market. That's been happening for a while. It's really accelerated with the chip shortage and inventory shortage. So the people who are in the market are less affected by economic factors. They've got really good credit, so interest rates don't really affect them.
Okay.
It's a much more affluent buyer that's in the new car market.
But if there is some people getting pushed out of the market, does that not eventually hit demand? I mean, if we lose some buyers, because businesses obviously operate on tight margins, especially the auto companies, and a fall of like 3 or 4 or 5% in sales will hit the bottom line really, really hard. If we lose like 3 or 4% of potential buyers that are pushed out of that market because of higher prices, doesn't that eventually, decrease the demand here going forward?
Not necessarily, because what we've seen is automakers are generating much higher revenue, beefier profit margins, because they are selling much higher priced vehicles.
Is there the potential then for them to lower some of these prices to bring these people back in? Like, I mean, we don't typically see prices of automobiles go down, but we have seen the prices go up so much in the last year. Could there be like a pullback in some of these prices? Like in Canada here, I'm looking at a new F-150 and it's $95,000. Some of these on the lot. And I just look at that and think, I'll drive my current F-150 until it's in the ground at those prices.
Right. And many of us will, but there are many people out there still willing to spend that kind of money. I don't see, they're not going to lower prices. I think one of the lessons that the automakers have learned out of this is a little less inventory is a really good idea, because it's been much healthier in terms of their revenues and their profit margins.
Oh, great.
We're never going back to the way it used to be, of massive amounts of inventory and then huge discounts. I mean, incentives are at their lowest level that I can ever remember.
Oh, wonderful. That makes me feel all warm and fuzzy.
Yeah, good for the bottom line.
All right.
Michelle, does the end of the month trick work still? When the guys want to meet their quotas and you kind of go in and now the end of the month trick doesn't work?
Not anymore. I mean, the trick now is you should be ordering. And in fact, I've seen ads by Ford that if you order your vehicle, you'll get an incentive, you'll get a discount, because they want people ordering vehicles now. And in fact, most vehicles are sold before they even arrive at the dealership, and sometimes even before they're made, which is something we've never seen before. That's a very European thing.
This is going the same way as the housing market. I feel like you're just describing the housing market to us.
It's similar.
Oh man. All right.
What about the whole EV push? What about that? I mean, maybe been accelerated with the war and the price of oil. I mean, we've been talking about this with you for years. That driverless cars or EV? I mean, do you see? I mean, obviously Ford's moving into that. GM is all moving into that. Are we still a ways off on the driverless cars and the big push to EV?
Well, first, let's start with EVs. EV sales have been rising since the fourth quarter of 2020. They rise every month, and also they're. I mean, most of that's because of Tesla's growth, but also we are seeing more EVs introduced to the market. Yes, we saw increased shopping of electric vehicles and hybrid vehicles when the gas prices went up. So we continue to see strong EV sales going forward. Autonomous vehicles, there's some robo-taxis from Waymo and Cruise running around in San Francisco and Arizona. But when are they going to be widely available? That'll be a while.
What about the Apple Car? Didn't they make some big hype?
Yeah.
They made
It's
some
all
big
real
hype.
secret. No, but who knows? I mean, Apple's kept such a good secret. It's sometimes we read it's on, then we read it's off. I think
They hired some big shot from Ford though yesterday.
Right.
31-year veteran. So
yeah. So who knows? They're so secretive. We don't know.
All right, Michelle, are there any other auto market trends that you're seeing that we need to be aware of right now as it pertains to the public market side of things?
Well, I just think when's chip production going to increase? When is production going to get a little bit back to normal? Those are the things that I'm watching on the immediate horizon. I think it's going to be a while. I mean, we just lowered our sales forecast for this year because we don't think the production is there to fill it. So we're at a 15.3 million forecast for this year. We downgraded that from 16.
All right. Well, I feel super positive about the future now. I had never extrapolated the housing market model to the car market, where is that the biggest lesson of this pandemic for all these manufacturers? Oh, less supply is a good thing. I can't. Maybe you're right. I'm sure you. But
it's absolutely true. Read the financial statements. Their profit margins are bigger. The dealer profit margins were at a record last year. They're so high this year that the Automobile Dealers Association isn't going to publish them anymore. So, and the big dealership groups are doing very well because
you're killing me as a consumer. You're killing me.
Yeah. Oh, for a consumer, consumers are the losers in this.
Consumers losers. One more.
That's been the way here for a long time, I think.
Maybe a little bit, out of your field here, but did you see what's going on to Lyft today? And Uber, not as much, but did you see what they're doing to Lyft today here?
I saw a headline, but I haven't dug into it yet.
Okay, down 26%. All right, well, Michelle, I think you've given us that well-rounded perspective on things here. I really appreciate you coming on.
Thank you for having me.
Michelle Krebs, executive analyst, auto trader. Always a pleasure. Have a great rest of your week, Michelle.
Thank you.
All right. So I guess the takeaway here is you got to invest, because if you're just a consumer, you're screwed. Man, that one made me feel great about car prices going forward. Surfer Boy says bring her back ASAP. Well, I'll do my best, Surfer Boy.
She's great.
She's great.
Consumers have been getting screwed hard here for the last year. And that is going to continue for a while. But eventually here, I think the consumer is going to have a better environment. So I don't see it lasting forever. I disagree with her. I don't think it's going to last forever. I think you are going to see demand destruction in some of these. Even though their margins are higher and they want to keep the prices higher, I think you're going to start to see demand destruction. And that makes me scared to own any automotive.
Oh, shoot. I meant to ask about Carvana. Damn, I forgot.
That would have been a good one.
I wanted to ask about that because that's been a disaster.
What a mess, man, Carvana. Can we just go and look at this chart here for a second? And the epic fail of everyone who bought the initial dip. So on the earnings report, which would have been back, I believe, on the 20th, stock dropped, obviously, from $100 down to $70, and then rebounded in the after-hours session like 110. What a gift that was. That was 7 sessions ago. We've had a 2-for-1 stock split. The stock has been cut in half in 7 days from that 110 buyer after the earnings report to $54 here this morning. What is the news this morning? Because every day I come in, the stock just goes down another 5%. Who downgraded it today?
So now what's happening is all the analysts that had buy ratings are way out to lunch here. So the last couple of days. So today is
Adam
a downgrade from Morgan
Jonas.
Stanley.
Really?
Yesterday was a downgrade from Wedbush and Wells Fargo. The day before, Stiefel still has a buy rating. All right, good luck with that. Anyway, it's just all downgrades now because everyone's.
It's Adam Jonas today. Morgan Stanley downgrading it to equal weight. He puts a $105 price target on it, so he's trying to get it down. He drew it to equal weight, but his price target is still up 100% from where this is. Is there anybody that's more bullish than Adam Jonas and been more wrong on all of these stocks?
He's been okay on Tesla.
I'm sure
Why is it on Tesla?
I'm sure I could find somebody, Dennis.
I guess they're all just got a job to be
somebody.
eternally bullish. But, these price targets, these absurd price targets, and they got to downgrade and, and they got to come and look, and here you are. So we're going to sell Carvana down another 5% because Adam Jonas lowered his price target to $105, which is up 100% from here. It's how absurd Wall Street is. So I don't know what to say, though. The stock's making a new 52-week low. The stock is not just making a new 52-week low. It's making a new 2-year low here. Has this company ever made money? Carvana ever been profitable?
I think so. Maybe.
I
Let me check.
I don't know. I guess when they start getting crushed like this,
no. The answer is no.
You got to start doing valuations, and you got to start looking. Is there the potential that this, obviously, could get into a reasonable valuation range? It's hard to do that math when they don't make money, or they've never made money. So, those stocks are just the market is just unforgiving of these companies. Put it in perspective. 1 month ago, we are, literally March 25th. So we're talking like 5 weeks ago. The stock was $150. It's down 60% in 5 weeks. These are absolute massacres on some of these stocks. Like, people have been absolutely crushed on some of this stuff.
Yep.
I'm just thankful that I didn't have I'm like, I can't believe I can own 50 stocks or 40 stocks in my long-term portfolio. And I've had the odd disaster, but I just look at it and think, I'm so lucky I don't have like a dozen of these things where, I had the Netflix, which was, actually it's my wife's RSP that had the Netflix, so I can laugh at her. But I've been lucky so far to get through this earnings season relatively unscathed from not having like so many of these lifts and, stocks getting crushed 30% down. I guess if you buy at reasonable valuations, maybe they don't get crushed like that, but holy mackerel, there has just been some stocks just killed.
Yeah.
Down today on a downgrade. On some of these I could find
somebody who's been dead wrong.
I know.
Dead wrong.
54.34 pre-market low. The next monthly low is 44. I don't think it goes to 44 today, but anything can happen in this market. Got a nice little trend line. I wish I could make it a little bit tighter because I could probably bring it into here. But that'll take me about a week to do. So,
all right, real fast. The calendar for tonight. Again, Uber. You can ignore that because they reported this morning. But tonight / tomorrow morning is the busiest overnight period of this earnings season. You literally have like hundreds of companies here. I'll tell you, there's 291 companies reporting earnings tonight and 178 reporting earnings tomorrow morning.
400 companies plus.
Yeah. So it's absolute madness. eBay, Twilio, Etsy, TripAdvisor, Booking, Fastly, Fortinet, Corvo. So a lot of big names. Allstate, if you care about car insurance. Yeah. So and then tomorrow morning, Shopify, which is huge.
Oh, look at Starbucks up $5.
Oh, you know what? Let's talk about that report. Great point, Joel. Because to me, again, I skimmed the transcript and I saw a bunch of tweets about it. It didn't seem very good. Like, the conference call itself seemed like there was a lot to not like, and yet the stock is higher this morning. I'll be honest, I'm not quite sure why. I guess their numbers were okay, but from all the comments that I heard, they're withdrawing their guidance. I saw that they're having a really hard time keeping employees. it didn't sound great, the conference call, from what I saw. And yet the stock is up. So go figure.
Not buying it, and
they even cut. They even
84.
like Joel. Just before I'm sorry,
Go ahead.
I
I'm sorry.
but I always do that anyways.
That's okay. Don't worry about it.
They even like no guidance. They got rid of
they're
like,
withdrawing their guidance. Yeah, I said that.
Like withdrawing, like not going to give guidance anymore, like going forward. So like we're not giving guidance anymore.
Well, only for Q3 and Q4.
Oh, is that what they said?
It's not forever. It's a temporary thing.
Usually that equals sell, but in this case,
it means they don't have transparency into their own business, right? So again, I don't know why it's up this morning.
I guess people look at it, they don't give guidance. They can't, like miss the numbers. I guess I don't know. No numbers to hit. So what do you think, Joel, technically? $80?
Well, 80 is a number. You haven't hit it yet, but I'd just longer term here, I'd just be licking my chops here at 81.50. All those highs there before the last breakdown, up $5.50. So if this thing ever gets, well, I won't say ever because you never know what can happen. But man, that's just, you hit it that many days in a row, and so that's a major resistance. So that's what I've been looking at on the upside. And first things first, there's probably some paper there at 80, but longer term, if you're a Starbucks, you're looking for this thing to go back to triple digits. You want to see it cleared this 81.40, 81.50 area pretty soon, or else I think it would just fade and go back down lower and eventually fill that gap at 75.79.
The other big disaster stock overnight here, which Joel and I discussed yesterday or the day before, maybe, was Tupperware, which is down 30% or 29% this morning.
Today there's two.
What?
I said there's always one stock down 30% on earnings. Today there's two.
Yeah. Well, there's actually a couple more as well, but smaller ones. Tupperware, their earnings per share came in extremely light. Their EPS for last quarter was 12 cents versus a Wall Street estimate of 52 cents. Sales of $348 versus $356 million. They also withdrew their guidance for the year and they said it, we ain't going to hit it. So what's the point in having it?
This was a COVID stock.
It was.
Yeah, exactly.
People were sitting at home,
yep,
looking at their disorganized cupboards and going out and buying Tupperware. And the stock went from $1.
We followed this one.
$1.15.
$1.26.
I got $1.15 even.
Either
way, it was $1, and it went to $38. This stock has been in secular decline.
Don't you remember June of 2020? June of 2020, it was it was the stock to buy. You can go look at the volume. Tupperware was the stock to buy in June 2020.
It was like everybody's stuck at home and they're reorganizing their cupboards and they need Tupperware.
Yeah.
And that is not the case anymore. We are back to normal, at least in North America, and we don't need that much Tupperware. And the stock was a dumpster fire going into COVID. COVID brought it out of it, and now we're back to non-COVID markets, and that's why this stock is starting to come off significantly here. We can look and say, oh yeah, $12.50 cheap. It was $1. And it was before COVID even, if we go back just to, get some pricing before COVID, because obviously COVID, knocked a lot of stocks down. But even before COVID started, the stock was only like $2.
Mm-hmm.
So, I mean, could we foresee a market environment where Tupperware goes back to $2 or $3?
No.
I think it's possible. I would not buy this.
Oh, 2 or 3. Yeah. I thought you meant the upside. No. Yeah.
No, I'm saying, are we eventually going back to where we were in 2019 when the stock was $3?
For sure.
$5?
Yeah.
It could.
Yeah.
So, yeah,
anyway,
no, thank you.
Just disaster. All right. We'll do some ticker time here. Someone asked about Shopify. As I said, they report here tomorrow morning. So I don't know. Stop going down for the moment.
Great company on the shopping list. Shop on the shopping list. It is on my shopping list as well. I said I would buy it in here, and I'm going to regret it. I think that I haven't pulled the trigger yet.
I did buy it.
Did you? When?
And then I sold it. I bought it I bought it 6 and sold it 5.
Well, that's still, at least you save some money. So I originally bought Shopify at 300 when we were in like the COVID. Yeah. And it went to 600. Joel, do you remember that? It went from 300 to 600 in like 2 weeks. I was like, I just bought this 2 weeks ago. I think I even saying on the show, I literally just bought the stock 2 weeks ago. It doubled in 2 weeks. I'm like, I'm selling it just because it feels overdone. That was a worse sale. It went from 600 and then obviously went to 1,700. And I'm like, wow, I'm never getting it back again. Here it is. I sold 600. I can rebuy to 460. I actually scalp 140 points in the long-term portfolio there. So the long-term portfolio, it was supposed to be put in there, and I put it in there, and it's doubled in 2 weeks. I was like, I cannot look the gift horse in the mouth that Joel's saying and not sell a stock that doubles in 2 weeks. So we're back. And I said if it ever came back to that pricing range that I originally bought it, I would buy it. So I should be probably buying it in the long-term portfolio here, but it's tough to pull the trigger when they hate high valuation stocks so much, and it's hard to pull the trigger ahead of an earnings report where we've seen high valuation stocks get tuned up to the 25, 30%. So I'm scared to death to own it through the report. Let's see the numbers.
You got to read.
I do like the
yeah.
company.
Oh boy. I mean, it's coming off the bottom. You have some bottom fishers in here. You've had a couple nice days. I'll stay with the rally until you have like a super big green bar like this. And if you have that, then maybe it's time to head for the hills. The dailies are not. I mean, if you're looking for, it's so hard to figure this out. I'd say, if you're looking for a major, breakout to the upside, I'd say over 476. I see two highs in the 475 handle. 75.35 was actually yesterday's high, and then 75.85 was the high back on April 25th. After that, it opens up to 492.71. But just like it's coming off look at the red bars. They're big and thick, and then like the green bars are just kind of like wimpy.
So
They're
minuscule.
like tepid buyers. They're not chasing the thing.
Hey, don't look now, but Uber gave back like most of those gains from their.
Yeah,
Joel, correct with the call.
I'm sorry about that, Uber. I didn't mean to say that.
Joel made this.
Well, you know what also is
Bearish
faded?
talk.
Another good call. I think we've got it. People are trading while we're speaking. That Airbnb is starting to repel too. We're in the 149 handle.
It's
too.
hard to chase. It's so hard to chase stocks. I mean, AMD is trying to hold up. Fantastic quarters for AMD and Airbnb. AMD already on Airbnb on the shopping list. Shopify on the shopping list. But again, we're just not in the market environment where you just want to own stocks that are, everything. You got to have some cash. You got to be sitting and picking your spots. And it seems like if you're chasing, it gives you another chance. So you don't need to chase in this environment. Maybe we're going to need to chase one day, but in this market environment, we have not needed to chase anything. Be
careful on this AMD, because I've seen it do this before. It might like blow through the pre-market high, which is 90. It's only a buck away here. Just
holding up well.
Yeah, 98.79. But I've seen it do so many times that I'll give a number, I'll think it's a good number, and then it blows through it like by a buck and a half. And I'm thinking, oh, that really wasn't that good number. And then you look like 2 hours later in the day, and it's like $3 below that number. So keep an eye on it. Just don't, if it gets to that pre-market high, you're taking 100, 100, 100. Just be careful if it goes up to the pre-market high and then can't hold.
All right. Man, we covered just a fraction of the earnings reports this morning, and
take your time.
And great call out. I think it was Falcon 9 in the chat that DoorDash will trade with Uber today. So
and Lyft, yes,
sympathy there. Okay, Datadog for David Griffith. DDO.
That reports tomorrow night, or tomorrow for sure. I'm not sure if it's tomorrow night or tomorrow, but
I'll tell you when.
Stock's sitting near its lows. Gosh, man, it can't own any of these stocks into the reports. The risk is just too high. There's going to be some gap uppers, but it seems like the ones that gap up eventually leak, and the ones that gap down don't come back. So it's just not, the risk reward to own into these reports is just not there. It's been this earnings season, and that's why it's tough to just say I'm going to buy this thing. I like the technical setup, and it reports earnings tomorrow. So who knows? If they say anything even remotely not good, it's a higher valuation number, it gets pummeled. Maybe it gaps up, maybe it goes up a bit on earnings, but then it probably comes back down again because that's what they do. So I just can't own anything into earnings right now, not these high flyers.
Next monthly low, 109.11. And if you do get some kind of crazy pop over 120, pair of highs sticking out right at 130 on here. You can definitely see that 130.70 and 130.66. So I'll let you guys take it from here. I'm going to go talk semis with Matt Bryson. A good day. See what he thinks about this AMD report. I'll check in with you guys later on.
Sell the rip, clearly working in Moderna this morning as well. Stock.
Oh gosh, did it give it back too?
Some of it.
They just don't hold. It's such a tough market. How do you know you're in a bear market when stocks gap up and they don't hold gains and stocks gap down and they keep going lower? Mm-hmm. That's your definition. It's not down 20% on the indices. A bear market is when the response to good news ends up being bad and the response to bad news is
worse.
Bad.
Yep.
So, I mean, this
literally
is the market we're in.
Exactly what I'm looking for.
It's tough to just come. And it's so tough, Mitch, to just say, yeah, this is the turning point. This is the turning point. We all want to be a hero. We all want to call the bottom. We all want to, make the turning point happen. Mitch left me. But it's just such a difficult thing to do. I've been caught trying to do it in Kathy even a couple of times saying, I think the ARKK, I set it back in when was it? It made the March lows. And then I said in April, I think maybe, the low of the 52-week low isn't the 51.85 and took it out. So I'm and I tried to buy, a couple of times I've tried to buy ARKK just for a swing trade.
I know.
And you get stopped out.
I know. Look, bottom line is
tough.
If you're trying to pick a bottom, I mean, good luck. Maybe you get lucky and you're right, but the odds are you will be wrong. He's tried it. I've tried it. We've all tried it.
We keep trying it.
And we keep trying it, and we keep getting proven wrong.
And the biggest problem is for the majority of people, Spencer, you did a good job cutting your loser in Shopify, but the majority of newer traders will absolutely not sell at the loss. Yeah. So then they get caught bag holding it too. And we all do it, we all do it in certain stocks. But if you're in it for a trade and it gaps down, you've got to get it out. My trading account, and I'll say it here again, goes flat every single day. I am 100% cash my trading account at 10 a.m. And that's when I take off. I don't trade from 10 to 2. I haven't traded 10 to 2 in a lot of years. Unless there's a Fed day or there's something going on, then I come back. Like today, I'll probably stick around because it's Fed. But I mean, from 10 to 2 is really choppy hours. So I have I trade the close, I trade the after hours, I trade the pre-market, I trade the open, and then I get flat at 10 a.m., zeros. Doesn't matter. Stock taking over, whatever, you've got bad stock. It happens to everyone. You got 100 stocks in your trading portfolio from overnight or something. You can get the odd bad one. You eat the loss, you move on, you live another day. So long-term investing accounts a different story, I do bag hold some stuff. And sometimes I sell it because the theory's, wrong. Or sometimes, the theme has changed. But, you try not to trade that as much. But the moral of the story is don't let a trade become an investment. If you've got capital in your trading account and the stock gap's down on you 20% or 10%, don't hold on saying, well, I can't sell at the loss now. You got to eat the loser. You got to move on. It's just going to continue to erode your account in a lot of cases.
Dennis, may the 4th be with you.
Oh, always. My goodness. Is it really?
Always.
Awesome. We didn't even talk Star Wars today.
Well, Joel's gone, so we can do whatever we want.
Now we can go full Star Wars show. Let's do it. When's the Skywalker show come out Disney Plus? Isn't it the end of the month?
The Obi-Wan Kenobi show. It is the end of the month.
Why didn't they do it May 4th? That would have been so much smarter. I should be running Disney.
You should.
You got to do the Skywalker show out on May 4th. May the 4th be with you.
You should be running Disney.
Drop the ball, Disney. I'm going to have to buy more stock just so I can go in there and become an activist in it, maybe. You got
a long ways away.
What's your big idea? Drop the Skywalker.
Drop Skywalker. Obi-Wan Kenobi on May 4th.
Idea.
That's my big idea. All right, Dennis. Have a great rest of your day. We'll talk to you later. Hey, before I hop here, we got a quick question in the chat. Someone who is new to Benzinga Pro, they asked, how do I create a watch list? It takes 2 seconds. Ready? I'll show you. You go to your main Benzinga Pro homepage. I know mine might look a little bit different than yours because I have, admin access. These are all the widgets. You just click on watch list right there, and bada bing, bada boom. I already have a watch list, but you can on the top right, create watch list. Boom. Call it Spencer's watch. I can't type my own name, but whatever. Spencer's watch list. Here we go. Add stocks, AMD, Airbnb, Starbucks, all the stocks we discussed this morning, Carvana. That's it. You just go to the main homepage on Benzinga Pro. You click watch list right there, or on the left-hand side, it says watch list. And that's it. All right, gotta go over to live trading with Benzinga. Don't forget, if you want to make a last minute decision and go come to the FinTwit Summit next week in Vegas, just scan the QR code on the screen. That'll get you $200 off your ticket. I'll be there. Neil Hamilton, Luke Jacoby, Aaron Bree will all be there next week. Nick Shaheen and many others. So check it out. You can go to FinTwit2022.com or just scan the QR code on the screen. Thanks to our guest, Michelle Krebs. Thanks to all of you in our chats. Smash that like, guys. We are not doing very good on the likes today. Likes is slacking. Let's see if we can get to 800 likes. It may be a bit of a stretch, but maybe we can do it. We're only at, what are we at? 361. 362, 365. Let's get to 700 likes in the next 30 seconds. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. And yes, thank you for the reminder, Enver. Check out benzinga.com/premarket, our newly redesigned pre-market homepage. You can watch our show there, get the biggest movers of the day, ratings, headlines, the whole thing. benzinga.com/premarket. And I'm going to hop, sending you guys over to live trading. Ryan, Mitch, Zunaid, everyone have a great rest of your day. Good luck at the open, and we'll see you for the Fed.